car market continues to accelerate, with total vehicle sales for the year to May rising by just over 35%. This includes sales not reported to the National Automobile Association. Well, joining me to discuss whether we can maintain the momentum are George Nyabadza. He's General Manager of Marketing at WesBank, Marcel de Klerk, Managing Executive at Absa Vehicle and Asset Finance. Welcome, gents. Thanks for coming back in again.
Thanks.
George, I'm going to start with you. Strong sales continuing, and all categories really looking pretty good, including the light vehicles, heavy and medium commercial vehicles as well. So a good picture all round.
It's a pretty good picture. I mean, I think the concern that's been in there is, could we sustain the momentum that's been taking place this whole year? And that has continued. So, and it's not just passenger vehicles, light commercial vehicles, which is a good indicator of a good level of activity in the corporate sector coming back in. So it's pretty good news at this stage. I mean, if you compare it to last year as well, I mean, it's quantum leaps ahead, which has also changed the way we look at the numbers. So instead of just being excited about growth year on year, we're now seeing what's happening in the current trends in this year alone, because I think we turned the corner and we now begin to analyze our month-on-month growth and what it indicates for us. I mean, one thing that's pretty exciting is the rate of sales per day. I mean, that's gone up a huge 405 per day if you compare May last year to May this year. A very good indicator of a significant turnaround in the marketplace.
Well, Marcel, you sent out some commentary to me a short while ago. And in it, you said you were slightly disappointed with the month-on-month rate of increase, which came out just above 9%.
Yeah, I think just to add what George has said is first, steady growth year on year, and really on the back of the growth in the economy, lower interest rates, and also the banks playing their part. But, looking at it month on month, 9% month on month, and we did expect a bit more. If you look at the main numbers and you look at it per day, less applications per day, less vehicles sold per day compared to the previous 3 months, February, March, April. So a bit of softness, but I think we probably see from a year-on-year point of view steady growth, and from a month-on-month point of view probably more stabilization now going forward. So there's definitely stability, and confidence is starting to stable. I don't think we can expect month-on-month the growth that we've seen in the earlier part of this year.
I mean, do you think it's an indication we might be losing a little bit of momentum then on month-on-month basis?
You know, at this stage, if you look at the consumer, the debt levels is pretty high, and we haven't seen any real improvement in the debt levels of our consumers. You know, and just to give you some indications, first, we still find that our quality of applications has improved. There's a slight improvement, but by this time we'd have expected quality of applications to improve much more. We still find our consumers delaying the replacement of vehicles. You know, and in our books, the average replacement cycle is now 44 months. You know, and that's nearly 16–17% up year on year. So definite indications. You know, I always say South Africans are car crazy. So for a South African to delay his replacement of his vehicle, you know, there's something behind it. So that's quite a strong indicator. And then if you look at new applications, just in May, we still nearly 50% of all applications offered to us were offered without any deposit. And I think 40% of applications submitted were for terms longer than 60 months. So if you look at those trends, definitely our consumer, there's stability in the life of our consumer, but there's definitely not a big growth in terms of coming back to the market. I really think a certain portion of our population is getting the house in order. They find themselves stable. And the growth will definitely be driven by the higher end of this market.
Well, George, let's pick up on some of those trends and what you're seeing perhaps at WesBank. Quality of applications, are you seeing any improvements in the quality?
There definitely is an improvement in quality. If you ever look at it, there's less people who are now having impairments compared to last year. And what we've actually seen is that while the number of accounts or customers who've gone into debt review shot up last year, it was a huge concern for us. There's been a stabilization, although at high levels, so there's not a significant increase of customers now going into debt review. So those who are actually submitting the applications have sorted out themselves. They have a clear understanding of their ability to get debt. They've resolved the problems that they've had. So we've seen that come through. I mean, the applications that are coming through to us have gone up by 20.3%, which is quite significant. And also in our approval rates have continued to increase. I mean, what we see now, which is beginning to affect the consumer, which, and again, I was saying, let's look at what's happening now as opposed to being excited about the growth year on year, is that a lot of dealers from our recent WesBank vehicle sales confidence indicator are concerned about the shortage of stock. So now that's become an issue all of a sudden, and the recent strikes have not helped because that affect the flow of product out of the factories. So the consumer is willing, is eager to go out there. They can't get new vehicles again because of the problems that we have. There's also a shortage of good quality used cars. A year ago, when we all reported a high level of repossessions, I mean, you could walk into an auction house and pick up a good quality used car. But that's now all gone away. Our repossession levels have gone back to levels we last saw in 2007. So there's no good quality used cars there. The price gap between the new and used has dropped by 16.5% in terms of pricing. And you have a shortage of new vehicles. So I may be willing to replace my vehicle, and Marcel was quite right. 43 months is a long time, but at some stage...
So you're seeing the same at WesBank?
Yes, but now what's happening is that as a consumer, we look at our mobility costs and our repair costs, and we're beginning to see that that cost is shooting up. So consumers have been forced to come and into the market. You can't just hold out much longer, because rather get a new vehicle than continue to maintain a second-hand car or a car for longer times.
Well, Marcel, and we chatted about the growth being across all categories, but particularly good were the medium and heavy commercial categories, month on month showing about 20% growth. Now, do you think that could have been some bus buying ahead of the 2010 Soccer World Cup, because of course we had to bus all these passengers around, or do you think it really is showing growth coming through in the economy?
There's look, the first part, we saw some buses in the numbers. I think we saw, there was one brand that I saw, if I can remember, 54 buses were sold. So there's definitely, if you look at the number, there were some buses sold in anticipation for the World Cup. But if you look at the business sector, and with special reference to the commercial part, the confidence is picking up, month on month. You can track it back from February, and that's a good story. Every single month, the business confidence is picking up, and then again, and we said it quite a few times, it's really in your medium and upper end of your commercial sector. And construction, mining contracts that were cancelled last year is reinstated again. So if you look at really mining, construction, those are the industries that is really doing well. And then again, if you look at the transport side, a lot of the contracts starting to get reinstated and put a lot of transporters back into business again. The concern in the commercial sector is still, as I said last time, the small businessman. The small business sector, I think their balance sheets, this whole downturn has just taken too long. And we're picking up that there's the ability to hold on is really reached critical stage now. And I think as banks, we should probably look at assisting as far as we can that small business sector, because that's your typical entrepreneur, went into business in the last 5 years. His balance sheet and his cash flow is just not enough to take him through this period.
As banks, are you doing enough to support them, George?
We definitely are. I mean, we
definitely are.
No, we definitely are. I mean, same thing we said with the consumer. We said to the consumer last year, when you get into trouble, the first thing you must do is phone the bank. On our corporate side, we have workout teams that engage with the business people, and we really try, because it benefits us, benefits the business person. Instead of taking them out of business, they will recover a lot more for their vehicle and owe us less. So we do take them through a workout process. So that's a real proactive thing that we're doing as a bank.
I hope they're watching today. Marcel, George was saying that there was a shortage of good quality second-hand vehicles. Do you think after the World Cup, as lots of the car rental companies perhaps start defleeting again, because they're going to have a lot of cars on their books for the World Cup, do you think we could see more good quality second-hand cars coming onto the market? Yeah,
if one look at the trend of used, just as recent as January, I think we sold just 2.1 used for every new vehicle. And this month we were back to the levels of 1.5 used for new. So that trend is reversing. And it's, as George said, definitely lack of stock, the price gap. Used vehicles are getting more expensive. So if you look at this stock, there will be more stock after the World Cup. But I think there should not be any risk of flooding the market. We've sat and discussed this with our partners, and there will be a responsible way of defleeting the stock. And so it can only be to the benefit of the industry. I don't think there should be fears that used vehicle prices and stock will depress the market, not at all.
George, just quickly, we had the vehicle market shrinking by 27% last year. What sorts of growth are you looking at for this year?
Well, we're still calling up to 468,000 vehicles. It's about 10 to 12% growth from a WesBank perspective.
Marcel?
Yeah, definitely around about the 12%. I think probably 2 months ago, some of us would have thought it can be 15. But again, if you look at the month-on-month growth, I think there's more stability. And there's still, the growth in the market will come from the high end of the market. There's still the debt situation of consumers will really create more stability than let's call it aggressive growth. So our official Absa indication is around about 12%.